traders at EDC Securities expect equity market performance to remain volatile as investors rebalance their portfolios based on corporate earnings released for the first quarter of this year amid elevated yields in the fixed income market. Olamofe Mathew, analyst at EDC Securities, joins me now for more market updates. Olamofe, thank you for taking the time out to join us today. Let's talk about this rising yields at the fixed income market and how much of an attraction or an appeal it is for equity investors who are weighing their options in terms of, perhaps short-term profit.
Okay, so if you look at what has played out in the market over the past 2 months, interestingly, you will see that the market was down in March and in April on a month-to-month basis. And that kind of speaks to the fact that probably they will see so much from earnings supporting market performance, bearing in mind that market was in the morning was positive in January and February. And so over the past 2 weeks, market was positive. And of course, while you would allude that to the fact that market has lost significantly over the past 2 months. So it makes sense for some investors to pick the dip, cherry pick some names that have convictions. Added to that is yield second market to being elevated. Of course, we call that we've been seeing some sort of interesting stock primary auction, which was not initially envisaged at the start of the year, right? Particularly because we know that nature is very high liquidity. So these have really been driving sentiments in the equities market, And so what we think going forward is that in this week, markets may actually print positive because you are seeing some dividend payments, right? And investors may likely want to invest more of those dividends. But we're not seeing so much of a reverse gain, right? From this point of view, we think that's why it remains volatile. At the end of the week, it could be just slightly positive, flat to slightly positive.
Right. I wonder what happens when the euphoria of the Q1 earnings fades, and what kind of catalyst could continue to sustain the market going forward. You mentioned high conviction stocks. Would that be the anchor for investors in terms of how they trade going forward?
I didn't quite get it on though. You're talking about investors' conviction regarding some particular stocks.
So right? Catalyst for the market going forward when the euphoria of the earnings in the season fades, what investors are going to fall back on?
Yeah, so I think it's fair to say that we are already in an era where we've gone past the deep story, right? And even with the Q1 results, like I mentioned, market wasn't so good in terms of performance in March and in April. And going forward, I don't think there are near-term catalysts to actually drive sentiments, drive activities as much as we would expect to see in the markets, right? Also bearing in mind that the outlook for yields will likely remain elevated. Yields will likely remain elevated, having in the medium term, and that itself is negative for equities. So, for most investors, their guide as to which stocks to buy now is just more centered around dividend yield. So why they may be so bullish in terms of price acquisition, except for some names, the overall picture is centered around buying stocks that will deliver attractive dividend yields at hedge against.
All right. Then let us talk about those stocks for you. What names come to mind? 3, 4 names for you.
So for stocks with attractive dividend yields, it's good to look at stocks in the banking space. GT Bank, Zenith Bank. I mean, dividend yields on those stocks are quite better than what you will see on the 1-year TB. Yields on 1-year TB. Some stocks like Access Bank as well is very good when it comes to dividend yields, right? But we also for investors who will take in the medium to long term horizon, right? Some stocks actually also present opportunities. In the medium term, like WAPCO, buy. They've been doing well in terms of performance. They're meeting their books so much. Financing costs is less pressure compared to what we've seen historically. Total as well, we're quite bullish on Total because we know that the story of subsidy removal is a case of when, not if, considering our fiscal position.
Right.
And so for investors who are going to buy into those stocks, probably make much more in terms of returns in the medium term.
Right, I was just looking at the industrial sector and looking at a name like Dangote Cement, good Q1 earnings, and also recent news around Dangote. Of course, the petroleum refining that's going to be commissioned soon. Just wondering how investors are processing that information, and of course, just holding on to that stock, that name, and of course with the refining and all of that. So how do investors feel about that, and what impact can we expect in terms of investor sentiment?
I think investors will be looking more at, because it's Dangote Cement, right? And of course, there could be a lot of intercompany relations, which could be positive for Dangote Cement as a company, as regards the refinery. But one thing to bear in mind is that minus fundamentals driving the price for Dangote Cement. We've seen some sort of impact from share buyback story and announcements that they got new approvals and investors keying in just to be able to make some kills should they start to buy the sector, right? But for the industrial space, what we are more bullish on is WAPO, right? And that's not to say that Dangote Cement has not really doing so much in terms of performance, but we think these are already priced in and that they are limited upsides to that stock, right? But we think that they are more upsides regarding WAPO, because we know that from a price earnings standpoint, it's quite cheap compared to peers in that space.
All right, Olamofe, we'll leave it there. Thank you so much for talking to us today. We appreciate your time on this show. Olamofe Mathew, analyst at EDC Securities.